Something strange is happening with XRP. It's suddenly outpacing Ethereum, drawing attention from top banking CEOs, and analysts are sounding alarms. Is this the final stage of the bull run, or the beginning of a manipulated surge into a trillion-dollar tokenized future? One thing's clear, XRP isn't just pumping, it's being positioned. But by who, and why now? There's a silent revolution happening in global finance. While the public debates meme coins and market cycles, institutions are re-architecting the very plumbing of money. And at the heart of that evolution is a multi-trillion-dollar opportunity: asset tokenization. From JP Morgan to BlackRock, every major financial player is building infrastructure to digitize real-world assets, including bonds, real estate, commodities, even CBDCs. Why? Because tokenized assets offer instant settlement, 24/7 liquidity, and programmable compliance, the holy grail of modern finance. And now Ripple is no longer just part of the conversation, it's quietly leading it. In a recent statement that rocked the inner circles of fintech, a global banking CEO revealed, "We believe Ripple's network will play a pivotal role in the movement of trillions of dollars in tokenized value across interoperable ledgers. This is not 5 years away. This is now." This statement isn't just bullish, it's a signal. Ripple isn't building a payments app. It's building infrastructure for a new financial era, one where tokenized value flows seamlessly across jurisdictions, and where XRP serves as the native bridge for moving liquidity between isolated pools. Think Swift, but real-time. Think Forex, but permissionless. Think settlement, but borderless. With its institutional liquidity hubs, there's regulatory traction, and a battle-tested ledger, Ripple's vision is clear: enable the movement of value as easily as data, and position XRP at the very center of it. This isn't about price spikes or chart patterns, it's about protocol-level adoption, the kind of shift that happens once every few decades. And those who understand it now will be positioned before the headlines catch up. XRP overtakes ETH on Coinbase as revenue surges and futures catch fire. While Ethereum has long been seen as the institutional darling of crypto, something just shifted. On Coinbase, one of the largest and most compliant exchanges in the US, XRP has overtaken ETH in trading volume. That's not just a headline, that's a signal. It tells us that retail and institutional attention is pivoting, and liquidity is flowing into a new narrative. And it's not just spot volume. XRP futures are surging, with open interest and leverage ratios hitting levels not seen since before the SEC lawsuit. What does that mean? It means smart money is positioning, and they're doing it fast. But here's the key difference. This isn't the kind of speculative frenzy that marked 2017 or 2021. This time, the volume is aligning with real-world integrations. Bank corridors are going live, tokenization pilots are moving into production, and platforms like Coinbase, under intense regulatory scrutiny, are giving XRP center stage again. XRP flipping ETH in volume isn't random. It's structural, and it's likely just the beginning. Every time XRP has regained visibility on major US exchanges, volume has exploded. But this time, it's backed by legal clarity, global demand, and the reemergence of XRP as a serious player in the next phase of finance. If you're watching closely, the rotation has already begun. Analyst warns XRP holders as bull market enters final stage. The charts are heating up, momentum is rising, but beneath the surface, experienced analysts are sending out a cautionary signal. We're entering the final stage of the bull market, and emotions are about to override logic. For XRP holders, this phase is the most dangerous and the most deceptive. Why? Because during the final leg of a bull run, euphoria and impatience collide. People FOMO in at the top. Long-term strategies get thrown out the window, and the market becomes a battlefield of fake-outs, shakeouts, and engineered volatility. One respected crypto analyst recently issued a stark warning. XRP's fundamentals are stronger than ever, but that doesn't mean it's immune to market cycles. When greed peaks, the market punishes latecomers, and that's the trap. Because while institutional narratives around Ripple and XRP continue to build, tokenized finance, stablecoin settlement, CBDC rails, the charts will still go through pain. That's how markets move capital from the impatient to the informed. So what's the move? Zoom out. Stick to conviction. Recognize that the final stage isn't just where profits are made, it's where most investors get shaken out right before the real run begins. XRP's long-term trajectory is aligning with global infrastructure shifts. But the short term, it's a war zone of narratives, price swings, and psychological traps. XRP monthly chart is bullish. Analyst foresees highest monthly close in history. Zoom out on XRP's chart, not to the 15-minute, not even the daily, but the monthly. What do you see? According to top technical analysts, what's unfolding right now on XRP's monthly timeframe is unlike anything we've seen since the 2017 mega rally. One chartist put it this way: this is a textbook compression breakout backed by real volume, consistent higher lows, and a reclaim of key resistance going back years. XRP is on track to close the month at its highest level in history. That's not hopium, that's technicals confirming fundamentals. For over a year, XRP was suppressed in a legal and liquidity chokehold, but once the fog cleared, it didn't just bounce, it coiled. Now the squeeze is unwinding, volume is expanding, momentum indicators like the RSI and MACD are flipping bullish. And for the first time since before the SEC crackdown, XRP is closing above multi-year resistance lines. Here's why that matters. Monthly closes are what institutional quant models and algorithmic strategies are built on. A historic close triggers alerts, not just for retail, but for funds, bots, and whales watching for breakout confirmation. This isn't about hype, it's about structure, timeframes, and timing. A bullish monthly close on XRP could ignite multi-month continuation, especially as regulatory clarity solidifies and global use cases roll out. The next candle could rewrite the trajectory, not just for price, but for perception. XRP could print highest monthly close ever if this happens. So what's the catalyst? What could push XRP beyond its current resistance and into uncharted monthly close territory? Analysts point to one core trigger: sustained volume plus institutional confirmation. Right now, XRP is hovering just beneath its historical monthly closing high, a level that's acted as both resistance and psychological ceiling. If XRP breaks above and closes the monthly candle with conviction, the implications are massive. This wouldn't just be a technical breakout. It would mark a return to strength, signaling to both traders and institutions that XRP's legal and liquidity bottlenecks are fully behind it. Here's what has to happen: continued surge in derivatives volume already underway, spot market buy-side pressure maintaining pace, a fresh round of positive macro or regulatory news, possibly from Ripple's ongoing global partnerships or central bank integrations. If these align, XRP isn't just poised to break records, it could flip the entire sentiment of the altcoin market. Remember, in crypto, monthly closes shape narratives, and narratives move capital. If XRP prints the highest monthly close in its history, it will send a shockwave through the market, a signal that Ripple's ecosystem isn't just recovering, it's leading. This could trigger FOMO from sidelined institutions, especially those waiting for the next BTC moment in utility-driven assets. The charts are whispering. If this close confirms, they'll be screaming. Legendary trader and XRP proponent, this is not a natural dip. It looks forced right as XRP flirted with its highest monthly close ever. Boom, a sudden drop. But to seasoned eyes, something looked off. Enter the legendary trader and longtime XRP proponent who came forward with a sharp take. This dip isn't organic. The sell-off patterns, the timing, the volume spikes, this looks forced, not natural. So what does that mean? It means this wasn't a case of retail panic or typical profit-taking. It looked more like engineered suppression, coordinated sell walls, algorithmic dump triggers, and market makers sweeping liquidity just below key support. The goal? To shake out weak hands before a larger move. Let's break it down. The dip coincided with bullish momentum and growing institutional interest. Major support zones were targeted with surgical precision. Social sentiment was turning euphoric, a known danger zone for whales and bots to countertrade. This isn't new. It's a tactic we've seen play out in every major bull cycle. But here's the twist. This time, the fundamentals are vastly different. Ripple's global infrastructure deals, stablecoin plans, and regulatory clarity are much stronger than in previous cycles. And that makes the recent dip even more suspect. As the trader puts it, they want your bags. Don't give them up cheap. This isn't just technical warfare, it's psychological manipulation. Because right before the biggest moves, the market always makes you question your conviction. And if this was indeed a manufactured dip, it might just be the last chance to get in before the narrative turns explosive. XRP Ledger gains momentum as global hub for stablecoin settlements. While the market argues over price action, something far more important is quietly unfolding behind the scenes. The XRP Ledger, XRPL, is emerging as a core settlement layer for the next wave of regulated stablecoins. Forget hype. We're talking real-world deployment, with pilot programs, institutional adoption, and even central banks experimenting with XRPL for instant, low-cost cross-border transfers. Here's what's happening. Palau launched its stablecoin on the XRP Ledger. Ripple has partnered with over 20 financial institutions to explore CBDC and stablecoin issuance. The XRPL's native support for issuing tokens and enforcing compliance rules makes it ideal for governments and regulated entities. In short, XRP Ledger is becoming the neutral ground where fiat and digital finance converge. And unlike Ethereum, which suffers from congestion and high gas fees, XRPL offers sub-second settlement, near-zero transaction costs, built-in tokenization features, including decentralized exchange functionality. The vision? An internet of value, where tokenized dollars, euros, CBDCs, and commodities all flow seamlessly across borders, settled in real time, using XRP as the bridge. This is the quiet infrastructure revolution. While most are chasing memes and volatility, XRP is cementing its role in the future of programmable money. We're witnessing the foundation of a new global financial mesh, and XRP Ledger is right at its core. Whether you love it or doubt it, one thing is clear. XRP isn't just surviving, it's positioning to move trillions, to underpin stablecoin settlements, and to become the bridge asset in a tokenized financial future. This isn't just price speculation, it's infrastructure adoption at nation-state levels. So, if you believe XRP's story is still unfolding, smash that like button to push this deeper into the algorithm. Drop a comment, I'm holding XRP for utility, not hype. And subscribe, because the real breakthroughs are often the ones hiding behind the noise. Stay sharp, stay early, and stay positioned.